All right, guys, today I want to go over this Euro odd chart. It is July 10th, 2019, by the way. I had somebody message me the other day and ask me a question about the Euro odd. Their question was, how do I know where to get into this trade at? They were looking for a sell, and apparently they missed it because if you look at, let me remove these lines here. If you look at this chart, we've basically gone from about 164, 164.50 all the way back down to about 160.50. So you're talking a good 400 pip drop on this. So they were kind of wondering where would you get in as a short on this. And this is one that we were going over in the premium group. And I had a couple different levels on this one. The first one was hit. The second one was not. The second one is obviously the better of the two. But nonetheless, the first one was, in fact, hit. So I kind of want to talk about this a little bit. First of all, I want to bring your attention to this wick right up here. This was a flash crash that happened on the Aussie pairs back in January of this year. Now, what's interesting is if you go to, and this is very important, by the way, if you go to any other broker, you're going to find the wick. Again, this time it was a lot larger. On the FX choice, this is this one right here that I'm using. I tend to use offshore brokers for my analysis, by the way, because they offer all the securities or instruments that I'm looking at. But this one right here, you can see the top on this wick was right at $1.6550. If you go back over to Simple FX, the top was over here at $1.7018, a 500 pip difference. If you go to, I believe it was Awanda, it was Awanda or Forex.com, one of the USA brokers. They had a top in like at $1.80 or something crazy. So another 1,000 pips higher. So you might ask yourself, well, which one am I watching? Which one is most accurate? Which one should I pay attention to when it comes to, because obviously if you've been trading any amount of time, you know that wicks do matter. So my answer to that is definitely the FX choice. Anytime, I usually do my analysis on Simple FX because they do offer cryptos, but I don't actually use that to trade a live account on. I use USA brokers. But with FX choice, what I'm finding is over and over and over, in fact, every single time there is a huge wick on our charts, the Simple FX provides the most accurate data, which is really interesting. What do I mean by that? Well, let's draw a line up at this wick right up here. Now, if you go back to the weekly time frame, look at this. This is the spike high back in 2015. Now, if you pull it up on right here, keep in mind, this is a 500 pip difference up here. If you pull that up, there's no levels over here. So this is garbage to me. The same thing could be said of, let me go back to Simple FX here. Let's take a look at pound, for example. If you look at the pound dollar and you look at some of the spikes and wicks that took place, like this one, for example, right here. Let me grab this line. Notice this was the spike low. This is FX choice again. We popped up here and then we came back down to pull back down here. This was the actual low before we took off, and this ended up becoming a multi-month low so far. I could probably even say multi-year low. But if you go over to Simple FX again, go pull up the pound dollar. Look at the wick down here. It goes all the way down here. And the market's reversed where? Far below it. You could go to any of the flash crashes that have happened in the last few years, and you're going to find the same thing. So anytime that I see a wick on my charts like this, I pull up the FX choice and do my analysis off of that. It's very, very important. So anyways, going back to our original trade idea here. This is the Euro odd. So having showed you that, you have a level right up in here. This was my really, really good level that I was watching for. Again, if you go to the weekly time frame, you can see we tested it over here, tested it here again, and if you pull up the monthly time frame, this has been a multi-year high. That's why we are struggling up here when we hit it. We hit it here once. We collapsed really, really hard. By the way, if this was indeed a really strong trend, this should have pulled back a little bit like this and then took off and broke through the highs. but it pulled back all the way back down to the last set of buyers right here. So that's why we, of course, struggled up here, because there was a lot of sellers positioned up here already from the last move. But anyways, this is the last time we were able to break through that level. This was back in 2009. So this has basically been the high of this market since 2009. That's 10 years ago. So anytime you have a multi-year high like that, or a multi-year low, you have to pay very close attention to it, because it's probably going to hold as support and resistance. So this is definitely an area that I was watching for on the daily time frame. This is your level, $1.6550. And by the way, if we were to go back up into this level, I do think the market's going to fall off of that. I believe that's a pretty good short. So that's definitely an area that I am still watching. But nonetheless, it did reverse up here. Why did it reverse up here? Well, if you've taken my course or understand even just a little bit about my teaching, you know that I trade based off of wicks and the close of candles. So, and when you come up to big wicks like this, a lot of times the market will not go up to those levels. In fact, they will ignore those levels. So anytime I see a massive wick and I see other areas of big support and resistance, I will, for the time being anyways, forget the fact that that wick is even there. So let's pretend this wick is not here. Let's look at the other levels that are around where we're trading at right now. And you can definitely see there is a wick right here. There is a wick right here. And there are many wicks over here. So if I were looking to go short on this market, this is obviously the biggest level. This is like the King Kong of all trading levels for this chart. This obviously is very good too. You can see that we've stopped up here, dropped, stopped again, major fall right here. Other than the wick up here, we did collapse right here. And so obviously when we come back over to it over here, you are looking to get into a short. Well, I would hope so anyways, but this is my secondary level. This is my primary level. You can see that $1.6350 was about where I would look to go short. And you can see the top of this market was around $1.6550, about 100 pips right there. You might say, wow, that's quite a bit. But when you're looking at a daily, a weekly, or a monthly time frame, you have to understand your reward to risk is going to be, well, in this case, 100 pips is nothing, because you were looking at a 400 pip drop. Even if your stop loss was 150 pips and you were able to grab 400, you're almost getting a 3-to-1. So it's not really that big of a deal. So I know a lot of beginning traders, they say, hey, I want my stop to be 10 or 15 pips. I'm like, okay, so if you're trading off the monthly time frame and you're looking at making a 1,000 pip move, are you really going for a 10 pip stop? There's no way you can time it quite like that. Even if you're working off of the wicks, it's probably not going to happen, because a lot of times you're going to have runs of the wicks and you might get a 25, 50 pip stop loss, or 50 pip stop hunter, or whatever you want to call it, off of the daily or weekly time frame. So this is really, this little move right here is nothing. This is what you were looking at right down here. How did you know that the market was going to stop down here? Well, this is what I define as a minor structure level. Price came falling back into the last area of buyers, which took prices to a brand new high. So obviously when you come down here, there's probably going to be some buyers sitting here looking to buy this market up. You might say, well, this happens a lot. Yes, it does. That does not mean you buy every single one of them. You need other criteria as well, which I'm not going to get into. But this is nonetheless an area you would definitely want to watch for. So now what we have happening here is we have buyers coming in off this level at 60.50. And so far we have popped all the way up to 62.30, almost a 200 pip move on this chart. And if you go down to the 4-hour time frame, you can see why we did pop off this level. That's why I'm bringing up the 4-hour time frame, because you have the 800 period moving average down here, which is a very strong moving average that you really need to pay attention to, especially if it is near another area of support or resistance. But going back to the daily time frame, this is the 200 period moving average on FX Choice. It is going to be a little bit different based on which broker you are pulling up. And if you go to Simple FX, you can say we were just a couple pips shy of the 200 period on there. Why it is like that, I do not know. I guess it's because Simple FX makes for a candle on Sunday or over the weekend that the other one does not. And it does make a difference a little bit. But anyways, at any rate, you had the 800 period moving average on the H4, and then we were very close to the 200 period moving average on the daily charts. So that is why the market was, well, or is bouncing down at this level right here. But again, the big one is this is the last set of buyers that were able to push these prices up past the last area of resistance. So this is definitely an area you need to pay attention to. So right now we're bouncing, and you might say, well, what can we expect after this? Well, this is what I'm expecting right here. Well, hoping for anyways. This level right here is something that you need to pay very close attention to. This little nugget here that I'm about to show you, if you can understand what I'm about to tell you, this will be very, very, very helpful in your trading. This current trend, this is basically the bottom of it down here at about $1.57. You can see we rallied all the way up to this level right up here, $1.6250. And then we've pulled back just a little bit, and then we've created a brand new swing high and continued to push up. Now, if this was in fact a strong trend, this should pull back a little bit, and then it should continue to move up. Obviously, we're hitting major, 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 major resistance up here. That's why that's not happening. But I say that to say this. If you have a long trend like this, pull back, and we continue to push back up, pull back, continue to push back up, the longer this trend is in place, the more likely you're going to see a very large reversal, because a trend cannot happen and continue on forever and ever and ever. You can look at these back here. You had this long trend, pull back, drop, and then major reversal. Same thing right here. They can't go on forever is what I'm getting at. So the longer a trend has been pushing itself forward, the more interested in a reversal trade I am getting. I am a reversal trader, so when I see long trends, I'm getting very, very, very interested, especially as we run into major, major resistance. But again, back to this, you have a push up, pull back, another leg up. If this was in fact a strong trend, you would have seen a pullback, maybe something like this, and then a continuation move back up. However, that is not what has happened here at all. What you've seen is you've seen a big push up, you've seen a pullback, and then you've seen another leg up, and then you've seen this pullback right here. If this was a strong trend, you would not be pulling back to the last low. So because this trend is showing me weakness, I am now very interested in getting short on this currency pair. Where am I looking to get short? This right here is the best level that I can see. It's probably not going to go up to here because we pulled back so far. Well, not initially. It's probably going to struggle here and fall some. It's possible that it could come up here, pull back a little bit, and then go up there. But the most likely scenario after watching these charts for many, many years, it's going to come down here. It's going to push up, either stop at the shoulder, create a head and shoulders, or it's going to come up to this top and pull back some. Either way, this level, if it is hit, is a very, very, very nice tradable opportunity. If you pull it up in the H4 chart, this is actually what I define as a CRT trade setup, which I'm not going to get into. If you're in the course, you know exactly what I'm talking about. You know the requirements for one of those. But back to the daily time frame. If we should pull up, we'll push up into these levels right here, I am absolutely going short on this trade setup. Based on what I'm seeing off the 4-hour time frame, I should be looking at least a, let's see here, about 150 to 200 plus pip move off of this top up here if we were to push up into these levels up here. So definitely watching this for a short up here once we get to the top again. Like I said, anytime you have a long-standing trend, this is what I would probably say a medium. But if, for example, you had a big push up here, pull back, big push up here, pull back, big push up here to the top, and then a strong pullback like that, and then it goes back up, this is a dead short. That's a 90% trade. This right here, because we have pushed up like this, and we are at major resistance, because it's not a really long trend. Like I said, it's only about medium. We've gone about half our screen here. This is still an 80% trade setup up here. If we come up here, there's about an 80% chance we stop up here, and then we drop at least a couple hundred pips. So this is something that I'm definitely watching. Again, you have to pay attention to the legs in your trends. If you're getting some really shallow legs like this, I am really not interested in trying to short on a retest. But if you begin to start to get some really strong drops here and we begin to retest them, I'm paying very close attention to those levels and I'm wanting to short those. So you got to really pay attention to price action and see what it might be telling you, and especially when you get into markets that have been running for a very long time and they're getting very, very exhausted. Once you see that, you know that a major reversal is in place because these charts need to rest. So, but again, very good question by someone that inboxed me, and I just wanted to go over this again. To cap everything up, this again is my secondary level, and then this up here is my primary. Again, I'm using the FX choice for my wicks because the other brokers are much, much less reliable. So you can see we didn't get up there yet, but this, we definitely reversed off of that several hundred pips. And again, like I said, I am watching this for short based off of the H4 time frame CRT, and this top up here is a pretty good top as well, only because it's been a multi-year high. If this was maybe a 6-month high, we came down, I probably wouldn't be interested in it because I don't like to trade off of what I call V-shaped reversals. So, but anyway, that's for another day. But anyways, hope you got something out of this. If you have any questions, feel free to hit me up on Facebook. Look me up, Calvin Ryon. That's Ryon. There's only one of me. And contact me on Facebook. Or you can just go to my website, www.calvinryon.com. Have a great day.